month, quarter, election, why a good September for stocks and an even better quarter for stocks has some thinking Barack Obama is a buy. Welcome, everybody. I'm Neil Cavuto, and if market pundits are right, Mitt should be scared, well, fits, because a reliable barometer just turned bad for him. Stocks closing out this trading month up, and this latest quarter up a lot more. The Dow, despite today's soft performance, surging more than 2% this month, almost double that in the last 3 months. Even stronger quarterly gains for the NASDAQ and the S&P, which usually means in an election year, good for the incumbent almost every election year. 39 days out, does that mean that the president is in? Market watcher Larry Glazer says no, not when you factor the recent spate of bad economic numbers in and the scores of major U.S. companies throwing workers out. So, Larry, which will it be? Which will be the more dominant theme?
Neil, just to illustrate that point, look no further than even a country like Greece on the verge of a depression, 25% unemployment, civil unrest, yet their stock market is up almost as much as our stock market. So it shows you how disconnected Main Street has become from Wall Street in this economy. And the reason for that is because of unprecedented central bank easing. And that's what we're seeing. That's what we're seeing play out in stock markets around the world. Bring it closer to home. You know, there's an old adage that says, don't fight the Fed. And, you know, that's based on the hope that the Federal Reserve can solve all of Wall Street's problems and Main Street's problems. The reality is it's very different for Main Street. The economic data is coming in very weak at an alarming pace. Just look today, Chicago purchasing managers, a broad gauge of Midwestern economic activity, the lowest level in 3 years. Put that with GDP earlier this week, durable goods, add them all up, you've got a weak equation. Throw in corporate earnings outlooks weakening. Federal Express, Norfolk Southern, Intel, Caterpillar, bellwethers for the U.S. economy. It sends a weak signal about the Main Street economy. Sooner or later, gravity will overwhelm central bank easing. The question becomes, does it happen before the election or after the election?
But you know, Larry, if you think about it, we live in the moment, and I'm not here to dispute what you're saying. I am saying that this barometer, what there is of it, has been right, 90% of the time. In other words, as the quarter goes before the election, so goes that election, either for or against the incumbent. I mean, if it's lousy, the incumbent loses. If it's great, the incumbent wins. There are many other barometers that point in a variety of different ways. So this is one of them, and it doesn't necessarily mean anything. But I'm wondering if what this is saying for Barack Obama is that people are going to look at their financial statements, if they're lucky enough to have accounts and they're up, or they're going to look at their home values if they're lucky enough to have a home that's moving up in value, and they're going to feel, at least on paper, some of this wealth effect that we hear much talked about. You dismiss that.
Well, I think it is a good point that, you know, perhaps what this is telling us is Ben Bernanke at the Federal Reserve is seeing data that's so bad, he's throwing the kitchen sink at this to stimulate us through the economy and stimulate us through the election, but also stimulate us through the potential fiscal cliff, which could lead to a recession down the line. But you're right, the wealth effect is a powerful factor. And the question is, are investors going to look at Main Street data, see that weakness, which business owners see every day, or are they going to look at their 401k statements? And in the short run, the 401k statements are a powerful factor. In the long run, the economic data is reality. And we know that the Federal Reserve alone cannot solve the world's problems. You've got to have some harmony in Washington. You've got to have unity in Washington. You've got to have a plan in Washington, none of which you see right now. But again, that reality may not take place till after the election. It's a challenging time. You know, heed the lessons of history. When we've seen this disconnect before, it ends badly, and it's at investors' own peril. When you saw the real estate bubble, again, you saw massive stimulus. It ended badly, and investors saw a disconnect with fundamentals. The tech bubble, stocks with no earnings. Again, it ended badly. So investors need to learn those lessons, need to look at the history books and make sure that they're careful, protect their assets, and again, always be mindful of the fact that there are many, many challenges ahead.
All right, bottom line is then I guess we have no idea. No, not you, but I certainly don't. Larry, thank you very much. Always good having you. Larry Glazer.
My pleasure.